Hello everybody, and thank you for tuning in to another video. And today we're going to be talking about the Nuveen NASDAQ 100 Dynamic Overwrite Fund, or Qqqx. Now this is a closed-ended fund, and the inception date was 2007. So this fund's actually been around for quite a long time. And I'll give you some description here. This is on their actual website, Nuveen, which created this fund, going over everything that this fund has to offer. And you'll see that the fund description here, the first thing, this fund is designed to offer regular distributions through a strategy that seeks attractive total return with less volatility than the NASDAQ 100 index by investing in an equity portfolio that seeks to substantially replicate the price improvements of the NASDAQ 100 index, as well as selling call options on 35 to 75% of the notional value of the fund's equity portfolio with a 55% long-term target. In an effort to enhance the fund's risk-adjusted returns, the strategy will consider the fund's tax position and employ techniques to improve after-tax shareholder outcomes. So essentially what this fund is just as it described, but in simple terms, what they're doing here is, they want to try to have less volatility and they want to seek an attractive total return. And they do that through primarily distributions. And I'll show you the performance of the fund here in just a minute. But what they're doing is they're selling call options against their equity portfolio to try to increase that distribution, that cash distribution amount. And what you'll see here is that you do have a decent cash distribution amount. Now going back to 2015, 35 cents was the amount that they were paying out, and this was on a quarterly basis. And so you'll see that gradually over time they've been able to increase this cash amount, and now we're sitting at 49 cents. So you're actually getting a fixed amount of dividends that will go into the portfolio or go into your brokerage account. And so it's paying out a pretty good amount of dividends there. I mean, going from 35 to 49, you're not only getting that increase in dividends, but when you look at the dividend yield, right now it's standing at 9.27%. And what we can look at is the fund's total return. And this is where, it's really going to come down, I think, to what type of investor you are and what you're looking to accomplish, because this can play a part in your portfolio. Like, let's say if you're retired and you're looking at this for passive income, this can definitely play a part in your portfolio. But you just have to keep in mind that when it comes to capital appreciation, when it comes to over time, getting the most bang for your buck in terms of the share price, you have to ask yourself, what are your goals, right? And so every investor is going to be different when it comes to investing in, something like this, like if this is going to be right for them, is what I'm saying. And so you'll see a lot of different opinions thrown around about is this the right choice? Is this a good fund, a bad fund? I found a Seeking Alpha article, and of course they're giving their opinion, substantial downside ahead, Qqqx. Well, maybe that's true. But maybe there's also substantial downside for a lot of other stocks and a lot of other funds out there, not just, Qqqx. And looking at the performance history, you'll see that when it comes to, share price appreciation, it's really not the goal of the fund. You'll see that $20 per share back in 2007, and we're sitting at $20.96. So essentially over the course of, let's say, how long has that been? Geez, 15, 16 years. This fund has not really done much in terms of capital appreciation. I mean, you'll see that we've gotten up to $27.31. We hit a high of about $30 back in the end of 2021. But since the market's been going down, this fund has been going down as well. And so when you're looking at something like this, I mean, it really comes down to, obviously, consult with your financial advisor if you're working with one, but really think about your own portfolio and how this could fit in, because you might find a fund like this beneficial if you're a retiree and you're just looking for that passive income. I mean, after all, this does pay a pretty good amount of dividends. And so if you're not really concerned about the share price and you're in your golden years and you're just looking for that constant stream of dividends, then this could definitely be something that might work out for you. But also ask yourself, would you be better off selling covered calls against individual stocks that you might own? Instead of, going with a fund like this, you could actually look at, individual names. And I actually have been working on a lot of course content for my private group that I'll be launching here shortly. And this private group, you can actually sign up via the YouTube memberships below when it's launched. I do have to reach 1,000 subscribers, but I have a lot of content on there about selling covered calls and the wheel strategy, cash secured puts, and that'll be part of that private group for $4.99 a month. If you guys want to support me and sign up for that, you're more than welcome to, and I greatly appreciate the support. But the point I'm trying to make is, giving an overview of this fund. This fund makes the money from selling covered calls against stocks in the NASDAQ 100, the NASDAQ 100 index. And so they have that against part of the portfolio. But ask yourself, would you be better served doing it yourself? And, because think about it. You're having expense ratios, management fees that you have to consider. You also have to consider the total return of the fund. And then you also have to consider the fact that this fund really has not moved in terms of the share price in several years. It's had kind of a slow move up. You'll notice back in 2008, it got down to $9, and it did make a recovery, but it took quite a while to get back to those highs. In fact, if you look at the crash in 2008, it took a while to get back to $20 per share. Okay, so 2017 is when it finally reached that net asset value again of $20, right? It took, I guess it briefly hit that in 2014, but to really get that sustained move above $20, it took a long time. And so the question becomes, if the market keeps crashing like it has been, what happens to a fund like Qqqx in terms of its share price? And ask yourself, where does that put your portfolio, right? Because we're all focused on our individual portfolios. Everybody has their own risk tolerance, their own investing goals. Maybe you are in that, those retirement years, like I said, and you're looking for that passive income. And so maybe you're willing to put 5% of your portfolio, 10% of your portfolio into something like Qqqx. And if it goes down in share price, you're not really concerned as long as you get those distributions. But this is a major consideration with a lot of these covered call funds, because what we see is that typically they do tend to underperform, a typical dividend growth fund. Like if you look at, something like the Schwab Dividend Growth ETF, for example, we could pull that up. You'll notice that there's going to be a lower dividend yield, but pulling this one up here, let me just show you the chart. Over the long run, you're getting a lower starting yield, but you're getting more capital appreciation over the long run. As you can see, it's done far better since 2011, 25 versus $68 per share. Currently peaked off at around $80. And so even though you're getting a lower dividend yield, you're going to get that share price appreciation, and then also potentially the companies that the Schwab U.S. Dividend Equity ETF invest in, just as an example, but they could increase those dividends as well over time. And so then the question becomes, maybe you could kind of create your own version of the Schwab Dividend ETF or your own version of Qqqx. Maybe you could incorporate covered calls and maybe some cash secured puts in there, the wheel strategy. It all comes down to your individual, risk tolerance and everything. But I just wanted to mention this because I feel like there's a lot of different opinions on these types of funds, whether they're good, whether they're bad. And my personal opinion is that they're not necessarily good or bad. It just comes down to the individual investor and what you're trying to achieve and how that fits in with your goals and your risk tolerance and what you're looking for in terms of a portfolio. Now, for me personally, I'm 26, or actually just turned 27 yesterday. But when I'm looking at a fund like Qqqx, I really don't want a fund like that. That's not for me. I would rather do it myself, right? I'd rather sell covered calls against stocks that I own in my portfolio, or do cash secured puts, do something like that, the wheel strategy, and make passive income without investing in an ETF personally. But what do you think? What are your thoughts in the comments down below? I'd love to hear it. This is just a basic overview. I'm going to leave this Seeking Alpha article down below just so you can check it out. Like I said, everybody has their own opinions on these things, and that's cool, right? It's great to have a discussion. It's great to have an open-ended discussion about this. And I think this article makes some decent points about the performance of Qqqx over the long run and how perhaps this ETF has not performed as well as some other exchange-traded funds out there. But I'm going to leave this link down there, and I'll also leave this fact sheet down below so you can kind of go over the Qqqx yourself to see if maybe it'd be something you'd be interested in. As always, though, if you have a financial advisor you're working with, be sure to consult them on these things. Talk with them about your individual investing goals, because like I said, that's ultimately what it comes down to. But when it comes to the dividends with Qqqx, though, you can't deny the fact that a 9.27% yield is very, very, I guess you could say, tempting or attractive, whatever you want to call it. Because for each $100,000 you invest, theoretically, at the current yield, 9.27%, you're going to be getting around $9,000 a year in passive income, which a lot of people would be thrilled to have passive income like that. But nonetheless, guys, hope you enjoyed this video, this kind of basic breakdown of a fund like Qqqx, and I'm going to make some other videos, maybe kind of similar to this in the future, going over other funds. I know it wasn't a very detailed breakdown, but I just kind of wanted to give my thoughts on things, and hope you enjoyed this video. Like I said, I'll leave this link down below, and also the link to the Seeking Alpha article if you want to check out this breakdown of the fund and what they think of it. And also, guys, like I said, once you see the membership, if you want to sign up for that for $4.99, it's a great way to support the channel. I will have a lot of bonus content on there, educational content in terms of like doing options for passive income yourself, so that if you want to actually do it yourself, you don't have to go through a fund like this. I have all the tutorial videos already created. I'm just trying to get to 1,000 subscribers, and then from there, once I reach the watch time requirements, I'll be able to put that down below. So I appreciate all the support on this channel so far, guys. It's grown actually pretty quick. I had to take a break for a while from making videos, but I'm back and plan on making some more videos soon. And anyway, guys, until next time, I will see you in the next video, and hope everybody has a great rest of your weekend, and take care. Thanks.